Okay, welcome to our ennea Open MasterClass. My name is Joanna and I'm happy to host today's evening session where we will talk about a very exciting topic which will influence our all lives. The MAAMA. I think you didn't hear about the MAAMA yet, so we will this evening. But I don't want to give too much away for the first. Just want to introduce our two speakers. As you have seen, it's Karen Löhnert from New Travel League and Jan-Frederik Valentin, our ennea Capital Partners partner. Karen is an expert, just for you, just a quick intro. Karen is an expert for all questions regarding sustainable travel. In the first .com bubble, she worked for two startups called Teleman and Buchungsmaschine. She founded Sleep Hero, a design sleep cubes company. I hope I pronounce it correctly. And New Travel League, an association of experts from different areas in the tourism industry that acts as a networking platform and consultancy. Karen, great pleasure to have you here.
Thanks for having me. Hi, good evening.
Good. And Jan, our great ennea Capital Partners partner, who is a very well connected person in the travel industry. Prior to founding ennea Capital Partners, he served as a senior vice president and managing director of Kayak Europe, and as well worked for Travel 24 and Ferry and Touristic. There he, or during your time, Jan, at Kayak, you discovered as well your love for investments. I think, or I hope everything is correct. So now for the next 1 hour, let's go into the topic and learn more about the macro and microeconomical interrelationships in the connecting with the .com bubble, blockchain, and Benjamin Button. If you have got any questions you would like to ask already during the session, please do not hesitate to post them into the chat, and then afterwards we will have the time to answer all of them. Great, let's start.
Thank you, Hannah. I hope it can connect the dots that you just mentioned. And first of all, I should say the MAAMA actually, going back, doesn't really exist, right? MAAMA in what we try to express here is a concept. It's probably more known as GAFA. In China, it's going to be BATX. And then you have other versions of it, but I strongly believe that what we're seeing and what we're going to try to elaborate is looking at the market from a very macro level of what's going on in what used to be the startup scene, what is now the tech magazine. Effectively, this affects all of us in the startup world much more than maybe occurs to us on a daily basis. And what I would like to establish, and I know it's very controversial, this is the idea of the Open MasterClass to open ways to very controversial thinking as well, which I'm sure Karen is going to challenge me on at the very end. Oops.
I'm not only going to challenge you at the very end, Jan, but from the very beginning.
Yeah. There you go. This was a great visual effect.
Maybe to start with one short introduction, Jan, for the others, to give you an idea where we know each other from. I had Jan as a co-speaker at in NTL Insight Month, which was a session that I gave on how to found a startup in travel industry. And Jan, as a finance expert, joined my session on how to finance a startup. And therefore, I'm very happy to co-host his session today. However, when I took my first look at Jan's slides, I admit I was a little bit shocked because, we're going through 60 slides. Very high level topics, very challenging thesis. And to be honest, when I went through the slides, I asked myself, oops, me as a little startup, shall I still go on fighting, or was this all in vain since all these big tech companies are ruling the market anyhow? So, but in the end, and this is something that I can promise, Jan will come up with some advice for startups, how to position themselves. And this will be your benefit in the end, that you know how to position your startup in case you run one, in order to get finance in the end, because that's what we all need. Finance round, not in order not to land in the startup grave. So Jan, go ahead, please. Just wanted to give a short introduction.
So we go into the first thesis, which is that the dot-com bust has actually born a century, which is totally different than any other before. And the biggest concentration of power in world history, meaning the digital power. So what happened, and let's just do a brief recap of the dot-com boom and bust at the beginning of this century, very much at the beginning. And the world we live on today is one in which there are more Amazon Prime members in the US than vote in the election, than own a pet or go to the church. Even a Christmas tree in the US, fewer people own have an Amazon Prime membership. You look at relationships, and more than 2/3 of the people spend more time with a mobile phone than with their significant other. It's virtually impossible, and probably all of us know the Amazon Web Service advertisement on television, where you have all these brands saying, "Oh, it's such a beautiful life because of the hosting of Amazon Web Services." It is impossible for any of us, I state, to live a life without any of the big four. And you can judge for yourself who you might not need at one or any point in time. You cannot drive on an Uber without Apple or Google. You cannot effectively run a lot of your offline living without the hosting that's also provided by the big four. So call them the MAAMA. The MAAMA would of course also include Microsoft, and I'll get to that. What happened with the dot-com bust? So the classical story that's actually told is that you had this huge influx of money into the NASDAQ. This is the NASDAQ index. I don't know if you're watching it today. It's doing pretty bad. It's almost coming down to just double of that 20 years after. You had startups investing the money into advertising, effectively losing a lot of money. The whole bubble went down, and most of the startups were dead. That's on the premise, the story that's being told. We of course all know that some startups have survived very well. If you look at the numbers in conjunction, you actually see that 50% of the startups have survived the crash. And if you look at the top 5 at the time, which were the backbone in terms of the infrastructure of the new century, actually have a pretty good return. Even if you invested at the very, very high top of the dot-com bust, you would be in high profits today, 140% ROI. So you of course had a lot of startups that died at that point in time, but what effectively happened, and this number for me is just stunning. If I look at the overall investment in the startup space, this is 2000 versus all the time afterwards. This is startup investment with a focus on the US. And what happened at the time, in my opinion, that this laid the groundwork in terms of the technical development for what we see right now, and we're going to see at least for another 30 years. We're going to see that, I'm going to elaborate why. This foundation is immensely strong. What we have to keep in mind as well here is inflation. So right now, the monetary circulation in terms of US dollar notes is double of what we had in 2000. So if you look at the real value of money, we're still way, way lower in terms of the investment into startups than in 2000. what I think happened at the time is the same thing that happened in Great Britain in the 1840s and 50s. The roads were built, the tracks were built for this generation of internet startups that are now ruling the world literally. And no one that is coming up right now, even in a second tier, even in Uber, even in Airbnb, even a Booking, which of course existed at the time as Priceline.com, is gonna come into even nearly into the direction. And why? Because at the time, so you had this bust. And what happened effectively with that bust is that suddenly you had everything available to build really, really great startups in a world where everything was possible. You had the hardware, you had the engineers. This is what the guys looked like in 1990. You had the real estate, which was open, San Francisco here, and you had a market which didn't really push you to anything. The world was really wide open from a digital perspective. You could do anything new, and a few guys just did it really, really, really well. And those are the guys that we're talking about here. If you look at Apple and Amazon, you know, those stock prices obviously are in a totally different dimension than they used to be back here. It's a joke. If you look at what these companies looked like at the time, what they look like now. And if you look today at the NASDAQ, a lot of people are saying the S&P 500, which is the leading stock market index in the US, is effectively an S&P 5, the big five. The question now is, and this is what we've learned through history, well, usually monopolies, oligopolies die, right? Usually something happens over time. There are lots of theories around that. And there's a destruction process in capitalism, which is described by many scholars as well, which says at one point, there's going to be an end to this, and there's going to be real disruption. I kind of counter argue why. If you have these things, you're probably living a pretty good life. You've God, you have love, you have money, you have sex, and you have anything you can buy out there, you get all of that. Maybe you can replace it, probably you will replace, and I would replace God by sense or meaning or whatever it might be. And if maybe there is something in there that looks more like this. And maybe this is very similar. So what we have here and what we have here is given us all that we pretty much need on a daily basis. And this has an impact on all our lives and on the power and the success of these companies. Now, how do they do it? And Karen, I know I don't want to depress anybody, especially in these times, which are bad enough. But I might. It's a certain view at this entire market and at the world in that sense. And in literature that I read, and I read it with a lot of pain, but at the same time with a lot of excitement in the past couple of months. One thing that occurred to me that is unknown in history, and that's effectively that companies become markets. Companies are market. Company controls everything that we do. And it takes the rent out of the sellers or advertisers, basically those two internet models, transaction-based or advertising. It takes data from consumers, and of course it lives off the world of venture capital and returns that capital to the world, to the capitalists, to the investors, who is pretty much left out in that entire equation is the employee. Usually, think of the Amazon employees, think of the Uber drivers, think of other people who are just needed to perform. And of course, we see this immense knowledge gap. We see the immense accumulation of wealth right here in these companies. And we see many people losing out, obviously, at the other end of the chain. In the US, it's dramatic. I mean, the inequality in society is growing. It is growing over here as well. And this is systemic, and that's my point. So if you look at what Google, and these are just screenshots from the past 2 days, I believe this one is from this morning. I go back here. So Google is now training every US company, is giving 100,000 euros worth of, this is what a state should do, right? This is not what a company should do. In a similar way, Meta is just released a new AI, language AI, which seems to be the best in the world, made it public. It's coming from Meta. We could talk about Libra, like currency that just got forbidden, fortunately, in the US, which would maybe have posed a threat to the dollar, but also to Bitcoin, and all of these developments. And what you read in the literature, if anyone is like, you know, doing economics, mercantilism is a form of a society very effectively. There is extraction of value by the state versus other states and versus society commonly. And in many ways, you can see this happening with the MAAMA, with the GAFA, however you want to say it. At the very end of the day, none of this is, of course, here for making everyone else happy, but the main goal is to get stock market value up. And now is where we kind of, you know, go into the direction of looking at what does this mean for the startup world, and what does this mean in terms of the overall economy. Amazon has an immense impact on the inflation rate in the US. You have the hiring of these companies just recently in Romania has an immense impact on the salaries in countries. So that impact is unheard in history. And I believe if you look at the big oil conglomerates in the past, if you look at other giant organizations, maybe take out the East India Company at the point of the discoveries, you're seeing a true systematic transformation of society here. So the companies coming from the digital space, offering the entire spectrum of products in the physical space. So you look at IoT, you look effectively at every single device being connected. Well, through who are these devices connected? And this leads also into a systematic transformation of accumulation in society, and effectively a change in the economic structure of society. And we see it on a daily basis. Now, those companies, and that's what I quoted before, effectively, if you look at the S&P 500, it's really the big five that are dominating 20% of that. That is also very, very unknown in history, and it is immense. It's just an immense development just in the past couple of years, including in COVID. Now, what do the company? Of course, they don't just grow organically, but what is happening more and more is that these companies are growing through acquisition, and they're doing it very well. Why? For the most part, they retain the founders. So they're really good at retaining the founders, which in my opinion is also difference to the big travel companies that we might be talking about later on and that I've worked for. Effectively, 70% usually of the founders stay, they get compensated accordingly. And through systematic acquisition, these companies do and have to effectively grow their respective market share if you look at the overall dynamics of the financial markets. And I mean, this is a curve left, down on the left, up to the right, very, very clear what's happening here. The growth it's a 2020, 2021. More, of course, happened during the pandemic. It is happening right now. And if you look at what this means at the end of the day, this again is on purpose picked a 2018 chart. It's kind of off the charts now. If you look especially at Tesla, that's not going to be acquired by Apple, most likely at least. But it's really about the big ones. And you look at the Netflix stock right now. You look at what Disney is doing or trying to do. You look at something like Peloton, which used to be really, really strong, but has not survived the latest crash. So what we have seen with the latest influx of money into NASDAQ is that it's not been sustainable. 81% of all IPOs have been with negative EBITDA in 2021. 81%. most of these companies will not survive, in my opinion, an M&A game by one of the bigger guys. And even someone like Netflix is in jeopardy, very clearly. It gets worse. I'm sorry about that. It gets worse.
I told you.
It gets really worse, but before it gets better, these are probably these days. I think politics will not stop the MAAMA. Why? You know, this is one thing you find on YouTube. There's more you find. Oh, that's also YouTube, right? So you find out what other channel would you go to? I'm not sure. You wouldn't. I don't know. There's no other video channel. I don't know of anyone. It's all YouTube. Second biggest search engine in the world after Google, belongs to Google. And you have these huge fines. Yes, it's happening, and the Digital Services Act will get to that. And there is effectively there is some efforts, especially in Europe, to try to horn in a little bit what's happening here in terms of market power, but it has historically been super ineffective. This is what happened after the European Union fined Google. The market share went up by 2% from 91% to 93%, and effectively everything they made in revenues plus fines, so revenues minus fines in 2019, it was actually from 17 to 19, the fines accumulated to this number. If you do the math and you subtract the numbers, Google still did better in Europe in 2019 than in 2017. And Google now pays more money in EU fines than it pays in taxes. It's interesting. So there's very little going on, of course, on the tax front, as most of us know. I think one main thing, and I don't want to go into the very details of why I think that even the Digital Services Act is not good enough, is that small companies are not as ready and as good at abiding by those regulations as big ones, very obviously. Not as good at fixing UX, logins, cookie tracking, et cetera. Those guys are just better at it. And usually what we end up with, data protection rights, et cetera, is that the small ones lose out versus the big ones. Is that on purpose? I don't think it's on purpose. But what regularly gets quoted, obviously, is the Communications Act, or this paragraph 230 in of the Communications Act, which was enacted by the Clinton administration back way before the dot-com bust in 1996. And usually, what's of course quoted is not this sentence, but it's the sentence about those not being media companies in the sense that they have to effectively monitor what's being communicated on the platform. That still exists. It's still right in there. It actually it's a few paragraphs after this. I just in the end, in the effort of time, copied one of the main sentences out of this, because it looks almost like, you know, an expression of love towards that entire industry. And I believe this love has a systemic impact all the way to today. What if you look at regulation, so there is a lot of mergers that are happening that are actually not, and it's very tricky in the details. I don't want to go into detail here either, but you have a lot of FTC regulations that's not properly enacted effectively, because you can suppress effectively the purchasing price in an acquisition, and then it doesn't need to be monitored as much, et cetera. So that's happening apparently, according to statistics, in 1/3 of the transactions. May I ask why? There is obviously a connect between the tech giants and the security state, as much as there is between the movie industry and the security state. And maybe, and unfortunately, I'm looking at this and saying this is almost similar. And yes, I mean, we live in this world that we all believe in, and it's better than Russia, and it's better than China. Maybe it's there because of China, actually. In the 1960s, the term was called the political military complex in the US, which was all about the military, and because, I mean, up until the Second World War, US wasn't as, of course, as engaged in the world, etc. I call it the Silicon Valley complex, where you have, I mean, why does every US company have the headquarters in the US? Of course, there's lobbying involved. We all know that. And there is and the main purpose, I'm not saying it's good or bad. I'm really not, I don't want to judge this here, but what really is happening, that at the end of the day, politics is of course backing Silicon Valley as well, very clearly. And you look at this and what we see in terms of the market cap, then of the biggest internet companies out there, Europe is nowhere. We're just nowhere. You end up effectively in a situation right now, and more so ever and ever, where you have two worlds of the internet in terms of the big tech, obviously China and US. And Europe, I mean, come on, 4%. And these dynamics usually are not getting better. And of course, you have initiatives in different markets, especially in France, when it comes to AI, etc. Not Germany is way behind. I once said into it was an enquete commission on artificial intelligence in the Bundestag. Well, I mean, they probably are still in there and asking themselves what it is, which is too slow, frankly, and a 2-year enquete commission won't solve it. Again, my point here is that politics and in Silicon Valley, the tech industry coalesce in order to accumulate more and to get bigger yet. That's just what is also in the eyes of many needed in this geopolitical conflict now. And I mean, looking at Russia, we might very well right now say, well, this is actually good, right? I mean, at least from our perspective, that there is a lot of power in the US that can be then exercised to potentially keep the peace as well. But this is coming together. And if you look again 20 years back, I mean, it was all nascent. There was nothing, right? The world was an open place, and we don't have statistics in here about which internet companies were big at the time, but we all recall AOL, Netscape, and a few others which were very powerful. What we see dramatically, I think, also is this US-China digital decoupling. So if you look at it from a startup perspective today, are you gonna get a Chinese investor in? Maybe, maybe not. There is a lot of, what we see a lot in the conversations is a lot of, oh, well, we're doing this anyway. It's no longer the copying. We just don't need you. We live in a different ecosystem. I'm generalizing, of course, but that's what we hear a lot. And last but not least, well, this is maybe Russia, other states. Of course, we see a lot of state impact on the digital spheres. And the internet as it used to be is not what it is today, very obviously. We don't live in a global startup world at this point in time. And it becomes worse. It becomes worse before it gets better. We deal a lot with blockchain, and I still have the hope that blockchain will deliver what maybe the internet promised at one point in time as well, but I really doubt it, to be very honest. Because the classical story on blockchain is pretty much this one, right? So you have centralization, you have Google, you have Amazon, etc. And everything has to go through that one connector or Citibank or whatever, some centralized system, the government, and suddenly you have decentralization. And you have everyone verifying every other person's. This is really what is at the heart of blockchain enthusiasts. Maybe again generalizing a bit too much, but pretty much this is the simple picture. Now the reality is that if you look at when you follow cryptocurrencies and you follow why they think crypto should go up, it's about institutional investment. It's about Apple adopting blockchain. It's about Elon Musk doing whatever, buying Twitter or Tesla buying it, etc. And I believe next to this, just flipping into this really quickly, of course it's happening. I mean, you have digital music platforms like Audios, which might at one day be like Spotify, potentially, if they got a lot of funding. I think they got 5 million so far. How far do you get from there? The classical question, great product, but how do you get to scale? You have words like the play to earn world, like the gaming industry, which actually is very, very promising for the crypto world. Again, the question will be who at the end will buy also these sort of decentralized exchange. And you have, yes, you have El Salvador, and the latest state was Central African Republic implementing Bitcoin as an alternative currency. You have the IMF, et cetera, going against it, of course, big time, sort of a different discussion around the dollar, et cetera. But this is not scale over here. This is playing around right now. Apple alone is much bigger than the entire crypto industry, right? Amazon is bigger. Ethereum is just about as big as Facebook. Like the entire Ethereum blockchain, which is underlying Web3, is just as big as Facebook. So I believe actually the access to that internet for the masses is again not going to come through the big giants that we have today. Like a wallet, who is going to implement a wallet? There are telecommunication companies are working on that, but a lot of people are looking at Apple, a lot of people are looking at Google, and then you look at payment, and Amazon is probably the furthest advanced. If Amazon implements crypto payment, it's going to be the biggest merchant, of course, in the world, owning a lot of Bitcoin then as well, et cetera, et cetera, et cetera. So simplistically put, I believe that the chances of creating something that new are not as big anymore as they used to be at the beginning of the century. And not that needs to be bad for any founder who's very successful in creating a new blockchain startup, but systematically, I don't see this massive shift now into a decentralized and sort of better world. Of course, there's private identity that might help in having a less data reliant system where effectively Google owns your data. I mean, it owns your life. It knows more about you than you do. This might be different if you can manage that a bit better through a blockchain. But overall, I think on the macro level, I just don't see this happening. And what might be worse, that at the end of the day, you're gonna have the big giants effectively now in one way or another digesting the financial industry as well. We're gonna get to that a little bit in terms of the size of industries. That finance, of course, is very, very big, and DeFi, the decentralized finance, is maybe the key application to their blockchain. That at the end of all this, there's not going to be a Deutsche Bank anymore, but there's just going to be Apple, and maybe there's no Volkswagen. There's only Apple or Google in that case as well, and that's a hypothesis they have in Wolfsburg for sure. Now going to travel, I'm going to rush a bit because I see there's only 24 minutes left. I've worked in the booking environment, of course, and we at the time thought about this. So these big four, could booking not be the fifth horseman, as they called it? And I would say the T is for travel, Tamama. I don't think that for many reasons, even close. And even if you look in the travel industry, you look at booking as the big problem out there. Maybe they're not. You know, maybe in the end it's again one of the top four, or maybe someone else. But I don't think that in terms of amassing like market power, they're nearly where any of the big four are. I call this soft power. Obviously, booking software company Hilton has done really well during the pandemic. Acquired a lot of stuff, but it's not enough to like usurp an entire industry in the sense that Google is doing it, and in the sense that especially Amazon is doing it. Every single element of the value chain in the end becomes theirs. This is the market cap of the MAAMA versus the biggest travel companies, so they're almost invisible here. And I think there are a few reasons for this. One is travel is just super complex. So it is super hard. It's even harder than selling probably every product on earth, is getting every service combined into a user experience, and many have tried. Many have failed up until this point in time. You need to get a lot right to get travel right. Where do you book your entire trip? Simplistically put. And this means also that your monetization in general will not be, your margins of course won't be as high because of the value chain being very, very long. You're not owning that value chain. So it's much, much harder to grow an effective business. One reason why booking is not really materially gone into other sectors up until maybe with the acquisition of eTraveli is that the margins are not high enough. So by acquiring an airline or a flight OTA, you're depressing your relative margin, and NASDAQ does not like that. So effectively, you don't do it for that reason. And this is also, in my opinion, why these companies have lacked a bit on the innovation side compared again to those who are really, really big right now. One thing, and Johanna talked about Benjamin Button, this is of course a crossover simplification, but one thing you read a lot, in order to really really have that incredible market power, you have to have an appeal that goes beyond the utility. Maybe Airbnb in travel, it has to go beyond the utility. And if you look at someone like Expedia, if you look at someone like Booking, you're probably not quite there. There are other elements to it, and I mentioned it. One thing that's regularly quoted in terms of how do you really sustain that market power at the very top level is this career path and acquisition strategy that has to stand out versus the rest. And this is again also where I believe we're not seeing this in the travel space as much, where you do M&A rather from a numbers perspective very often, and you don't have that sort of feeling that now you're entering into a company where you want to spend the next 30 years of your life because it's so brilliant, you're going to change the world there. That is missing a little bit. You go into more detail here. But the Benjamin Button effect, just to say that quickly, what they mean in the literature by this is that a product gets better with appreciates in value with every usage of it. So network effect in a sense, but a network effect on a higher level as well, which again, just using a travel OTA, maybe that's not the case. And when you look at your startup, and if you found a startup, I think that's one interesting thing to look at is really how can you make sure that every transaction, every interaction makes your product better? What's the network effect of it? What's the conversion effect, et cetera, et cetera. It's one way to look at, and just Amazon in particular is just amazing at it, as we probably all know as users, most of us. The next thing is acquisitions. Yeah, the travel companies have really not been great at acquiring, if you look at it. And that's one thing. If you found a company and you put into your deck, I want to IPO, sell to Booking or Google, well, wait a minute. It's usually it's not very likely. It's just not very likely if you look at the acquisitions that these companies have done in the past. Now, who could in travel actually maybe be that big T? Uber announced it just recently. The big question mark, I think, here also is around that connected trip. And if the latest Skift article that I found around it was like, well, it's just not very likely that Uber at the market cap that we also just saw is fairly small, is actually going to get to that connected trip, and from a ride hailing to people booking, all of that. Maybe, could be, we don't know. In terms of the entire DNA of the company, I would argue that they have a lot to them, except people hated them and their, their HR, etc. at the time of Klasnik. But with Dara, who ran Expedia before, that has changed. And it's a high frequency product that we all use. So maybe Uber, might be a competitor. We will see. The reason I think, if you look at what out of the big MAAMA that just quoted, the biggest in travel is Google, right? Is Alphabet. So Alphabet is pretty much as big as Booking. 7% of our Alphabet revenues are in travel. And you might argue, well, logically, Google is going to be the biggest player in travel. And I think that's much more likely than Uber or Booking exceeding that in a big way. Alphabet, and by all the dimensions, is going to outgrow Booking in terms of travel business, in my opinion, down the line, based on a lot of what I've said. Now, one reason why they might not have done it yet, and why they might not be bigger yet than they are with Google Flights and Google Hotel Finder, etc. Google Maps, look at Google Maps. It's not a product that it could do so much more, and I think it will. In my opinion, Google Maps is going to be the most powerful travel application of all. One reason might actually be that travel is so small. So you look at the opportunity that these big companies have, and coming from retail mostly, health, Apple, real estate, a little bit, all of them, blockchain coming into it, finance for sure. Finance just massive, and compare travel to that in terms of total market cap. It's not so super attractive that they have disrupted the market yet as much as other markets, including the media market. So this is what's kind of good for us as startups. But it's also a danger down the line. We have to think 5-10 years ahead, of course, if we found today or in a stage of maybe 2 years in the market, that very well the impact of Google, potentially also Amazon in the market, may be bigger. Now, I made a bit of a joke, because you see the cars industry here, and the only guy that has effectively, in terms of market cap, been as powerful enough to be actually one of the top 5 now is Tesla. I mean, they're very big. Also, their rumors they might also drop, bigger than all of the European car companies together, as you know. And why would Tesla not become a travel company, right? So in that logic of usurpation, why not Tesla? And they own the electronic stations, the charging stations. A lot of mobility might go through them. Maybe at the end of the day, they will essentially have their cars manufactured in Wolfsburg. Might all happen within 10 years. Why not? Not very likely. And it's enough to do with Twitter right now, obviously. Now, what does it mean if you found a startup today? I think one point really is, and you'll never hear this from a VC, you'll just never hear it, is think small as well. Think smaller in the sense that you have a plan B and maybe a plan C. If what you're doing is just not going to get to that stage of, hey, Google is going to acquire me, Booking is going to acquire me, or I'm going to IPO. We had 10 IPOs in the last year, and we're going to have probably 10 IPOs in travel this year. And if you look at the market cap of these companies, pretty horrible. We're invested in one of them ourselves, it's what it is. You don't actually see a lot of traction. Obviously, you have the macro overall not doing so well. But what we have seen with these IPOs is a lot of effectively inflated. We've seen inflated valuations in the private market. So inflated in the valuations with VCs. You go public, and suddenly the air is sort of, out of the balloon a little bit, and that's been a pattern. So IPOing as a goal, still tremendous. I mean, amazing. Whoever can do an IPO, that's just amazing. But it has been a very, very tough play recently, and that's because overvaluation in the private markets, going into public markets, you don't show your numbers. Again, 80% of the startups not profitable. At the end of the day, naturally, things come down as they do today. So when we look at, and you start, I mean, we invest in startups, and in every startup you invest, we believe it's going to be super great. I mean, obviously that's because we believe in the team, we believe in the product, we believe in that entire path, and essentially we all think, oh, it's all that way up. Of course, you know, we're very optimistic. We have to be in a way, but the reality is different, of course. And we've tried to cluster for ourselves effectively what the M&A market looks like. So you have the public players, you have those travel players, you have regional and sector leaders. You can all read it here, and then you have startups who become buyers as well, of course. And of course, there's a more VC game going on in terms of startups being funded for buying other startups. But usually, when you're down here, you're looking right to the top, and the reality is just usually a different one. And of course, most end up left and right here. But then you make it up there, and you look at travel at M&A deals in the past years in travel, and this is statistics from PitchBook. It's never accurate and it's never comprehensive, but the pattern is pretty clear. It's not up, right? It's not. It's stable at best. And if you look at what deals are done, yeah, again, I mean, so many unicorns. Interestingly, the unicorns are usually acquired by Booking and Expedia. And the reason the reason here has also been sort of scale and profitability. I would say that the MAAMA again have been more strategic if they have acquired travel startups, according to this count, which again is just a representation of a subset. Have been more strategic in that sense. They didn't acquire for scale because they have themselves. They don't need to acquire a travel startup for scale. But usually, I think that the best, for most startups, the best path will be a regional or sector leader acquisition. This is where most likely you're not going to have a fire sale, which you have mostly over here, obviously, and you might be acquired by another startup. Many out there right now to acquire. But if you really make it, and that's what I mean by thinking small, get acquired by a really strong regional leader, maybe in the US, maybe in the UK, maybe in Germany if you're somewhere else, or a sector leader, that's a pretty good thing to be doing. It's not something that we're gonna read in pitch decks, I guess, for the most part, because it's not the story what investors commonly like to hear, but that's the reality. And I think it's important at one point in time to think about that in the journey and to think about that from the very beginning as well. I'm gonna get to the end because otherwise Karen is gonna punish me. But this is one point here, which is of course a bit depressing as well. I'm sorry to say, you have this share of VC deal by stage, and early stage is going down. Why? Because this massive future is just not seen by many in many industries. And you have effectively this pattern, right? So you have, this is seed investment by category, and the advertising industry, e-commerce industry, food is a bit different right now. Food is actually going up, but you can also see it in the pattern in travel. Yes, you have a bit of COVID in here. Obviously, you have COVID in here, but you have probably had the peak in terms of investment and the number of seed rounds in the Western world in the sector. People are getting smarter. People are more knowledgeable about what paths can still work and what can't work. And it's probably very wise to think from the very beginning what your buyer space will look like in this world. And I'm done here. Karen, over to you.
Yeah, thank you, Jan. You know why I put on my black jacket today? Because of your depressive message. No, but to be honest, in the end, there was some hope. Let me ask first, how many startups do we have in the audience today? Do we know that?
It's probably for Johanna to know.
Raise your hand.
I can't see the
One.
Okay, Roy.
One are probably.
I think it's around, we're looking through the names, it's around 4 or 5.
Yeah.
4 or 5. So that means a third maybe out of the audience. So yeah, but let me ask the question, how do you as startups feel listening to this message? As I said in the very beginning, at my first glance at those slides, I felt depressed, but in the end, the message that think small could be the solution in the end made me kind of happy. I mean, I never founded my startup in order to sell it one day to either Google or Amazon or Expedia or whoever. I founded my startup because of my personal passion. Yeah, this is my driver. And certainly I want to make money out of it one day, but this is not my main driver. And the question is if Elon, Jeff, or whoever you name it, what those people's personal passion was or driver. I mean, was it only making money in the end, or did they want to invent something to leave a mark forever? I don't know. But yeah, this would be my first question to all the other startups. What does this message that Jan gave us makes you, what kind of feeling do you have listening to this?
Can I comment?
Yes.
Okay, when I listen to this, it sounds kind of depressing, but then I say, okay, I'm not worried about that. I'm in a niche market. I have passion. We are profitable, and I will keep it small, and I will grow the business. And
what are you into, Bernard?
LGBTQ tourism.
Oh, cool. Yeah, that's a very cool niche.
Yeah, so therefore we've reached profitability. We're growing 30% month on month. And at the end of the day, even if Booking wanted to buy me, as long as it stays an independent company, maybe I would consider to take some money from them. But otherwise, okay, I will soldier on. I have my passion. I don't want to be a unicorn. If I can be a unicorn, all well and good. If not, I'm happy to be a camel and in the desert and making money year in, year out.
Yeah, so your answer is the niche market as the profitable solution for a start market, because this is exactly what I do. I'm operating in a niche market.
Yeah, and therefore we're never, if we're only going to be 7% or 10% of the population, it's small. So therefore we can never be huge in that sense.
But yeah, but you are then the expert in that certain market.
Yeah, exactly. That's what you want to do. You want to control that market. Yeah.
Yeah. Okay. Jan, would you agree that the niche markets are still an opportunity to grow for a startup?
I think as long as, again, I think as there is an element that the big ones don't want to do is, but let's look at Google here. Will Google aggregate all of the data and all of the know-how on the fulfillment side to process such transactions? Probably not. What I worry about, and if you look at developments in AI, for example, again, I don't want to be super pessimistic, but again, Google and Meta are very, very high up. And one discussion that we are having is, could in the end, in a world where maybe you don't even have this visible device anymore, but you have your avatar, and that avatar, I think, essentially feeded by an AI by Google, goes through the internet, and based on your personality finds what you really want. I don't know if I'm expressing myself right, but my fear is that the AI game, if the AI game is also won by these guys, that on the data side, at least, they could find you and your customer, the 7%, everything that they need and want without even needing your website. The fulfillment, I guess, will have to be done by someone because they won't do it. I think that is a real danger for the travel industry, and it might also occur to things like meeting. We had a discussion yesterday around bakeries and how bakeries know when there will be more people there or fewer people there, and so accordingly they order more bread or more wheat, etc., or less on a given day. And I think that data again can be fed in by Google. It could be Google just showing all of us that, as much as they have done with some applications in look at transportation applications like from A to B, etc., etc. They're all gone because Google Maps is doing that. But yes, so I'm still optimistic, even if it doesn't sound like it. I think on the data side it will be hard.
Mm-hmm. Yeah, but a niche on the one hand offers you to be part of a community. And I think this community feeling is something that a big tech giant is not able to build up, according to my opinion.
Yeah, I think that it's also a niche. It's maybe too small for them to worry, even like the likes of Booking.com. And our market is all event driven, related to the people who go to the events. So with our partnerships with the event promoters, that's how we drive our travel. Yeah. So.
Yeah. So when you're talking about events, you're talking about emotion, and to my opinion, emotion is something that a big tech giant can never transport or transmit to a community.
Yesterday I read, how about the metaverse? I think, how about Meta in the worst case? Aren't they doing this? Not perfectly yet, but.
Any other startup opinion out of the audience? Bernard, thank you very much for your opinion.
Well, if I may, I've been closely involved in the development of Google Flights with the purchase of an integration of ITA software. At that time, that was driven by, also guided by Northwest Airlines and later on Delta and KLM. And they still don't have it right. If you look at the results of Google Flights and their actuality and the accuracy in terms of flight schedules and prices, it's just horrible. If you look at the quality of the taxonomy in schema.org at Google related to travel, it's just a laugh. And it's not that they cannot do it, but I think that what you see is that the likes of Alphabet have so many categories to cover that they simply cannot have this deep integration of knowledge of each industry. And following the let's say the pattern that Jan highlighted on the size and the complexity of travel, it's not very likely, to my opinion, that the likes of Alphabet and Meta are able or even willing to invest to the point that they're actually able to meet let's say the quality criteria to be best in class in that segment. And then if you can come up with a profitable business model with the domain knowledge, I think that then there's definitely a fair chance to a certain size, and you might call that a niche, to run a profitable business. Does that make sense?
To me, it does. And we had at Kayak, of course, we always had this benchmark versus Google. We saw that one thing we could never compete on is speed, which is impossible based on ITA partly, but then also based on their predictive analytics, and that's 5 years back, right? So I think I would totally agree with you, Roy. I just wonder what it will be like in 10 years when you have some more general AI, which maybe is more sector agnostic and can solve some of these issues. But right now I would agree, yeah.
Jan, you recommended that a startup should think about how to position itself to find the right investors, and start with this thought from the very beginning. I think this is quite a challenge because when you start, you never know where you end up, and you don't know the whole path from here to there. How would you recommend to build up this know-how to where I find the right investor that brings me to the next step?
I think that this is also how I, approach this exercise for me, if you will, today. It's more of a conceptual approach to it. What we see a lot is that people have great ideas. Sometimes and same for us, our own ideas, many have died, right? We had this idea, oh, this must work. And then for some reason, usually go to market didn't work. Yeah, we didn't have an idea how to scale it. And I think here the same thing applies, like when forming a startup, the end game should be in place, because effectively what you're doing, you're creating a commodity which you want to sell at one point in time. Even, maybe you want to monetize it until you die, but that is very unlikely these days, right? So usually someone who forms a startup does it in order to create something great and new and maybe change the world, but to sell it as well at the end of the day. And that thought of where could this go is dynamic, right? If you look at the mobility industry today, and we're trying to sell startups in the mobility industry, it's changing so dramatically that it is really difficult to say where, say, a rental car startup may end up at a good buyer, because the entire industry is sort of merging. Volkswagen is competing with ADAC in the end, and Uber, of course, now they sold FreeNow, which I don't know why, and Mercedes and BMW on a side effect, but it is dynamic. But just keeping that dynamism in mind as well, in my opinion. Sometimes the buyers are outliers. Sometimes they're in a space where you wouldn't even consider them initially, but it is complementary to their product. Like banks buying travel apps, for example, and probably there are more interesting examples.
Yeah, especially in COVID times, to my opinion, it's very important to look for investors that don't come from your original market, but from other markets that went through the crisis much better than travel industry, tour operators, or who could ever be your investor. That's exactly what we did. I thought about where are the industries that went very well through COVID times, and in the end, my potential investor could be the Schwarz Group, Lidl and Kaufland, because their business went well, and I think they could be interested in travel startups as well. Why not?
Just let me give you one scenario. If you've got, let's say you've got a big digital brand, okay, who's got a huge audience, a huge customer base, and they're not so profitable because the advertising has dried up. Okay, so they were offline, they became online, and they've got to think, well, how do I make money? Maybe by buying a travel startup and they were using their audience to drive business and drive bookings, it's a nice synergy that you can put together. So what I'm saying is that you may not have thought that you take a publishing house and you put it with a travel startup, but maybe A plus B makes something really interesting where the publishing is going down the drain, the startup is finding its customer acquisition, or it's got to spend huge amounts of money like booking and various people do. But if you put the two together, maybe it's the right formula, as an example.
Yeah.
Mm.
Combining industries or different sectors who've got synergy or they can use each other, maybe is the way to go. Yeah.
Yeah. Yeah, so it's a support essentially with the digital know-how that one has, supporting those industries that are not very digital yet, or players in those industries before they get disrupted by the MAAMA. In a way, certainly makes sense. You look at real estate, for example, a lot of real estate money now going into travel as well, on a more optimistic note.
Into travel or into the hotel industry?
Now, to your point about Schwarz, we are seeing into hotel, but also into digital software, of course, because it's no hotel can live without, digital experience these days. So you see real estate companies investing in travel digital companies for sure.
Yeah. Okay, so there's still hope. This is then the good message at the end of the day.
Sorry, but one question to Jan. Does that mean that you're saying that the VC that you work for is going to stop investing in travel because you say there's no potential? Or, I mean,
you don't see the question mark here, right? Yeah. And the way that I've developed it, of course, is to provoke as well, because in a world, well, in a bad world in 10 years, at least on the macro level, I see real clouds on the horizon there. We do invest in travel. We only invest in travel companies. Yes, only. But I think this thinking shapes a little bit how we look at them.
Yeah. So, because my question is, where are the VCs going to put all their money? If, I mean, not that they have to put it in travel, there's other opportunities, but what we're saying is that if these big companies are controlling the market, what are VCs going to be investing in?
Well, but you've seen on the PE level, you've seen in the crisis that a lot have actually gone into stocks for the first time. And Amazon now Amazon is gold, right? In a portfolio of a big PE, Amazon is gold. And on the VC level, you see going into the bigger ones and just growing the bigger ones. Sometimes overfunding them, even, I would argue. Sorry, I'm just flipping to that slide again. So what you see in the market is all the way. You see this pattern, right? That the early stage is just losing out, even though there are more investors overall versus the late stage VC. So into more mature startups. This is where most of the money is going.
Well, it's a new startup. You've got to reach profitability a lot faster, really, to be able to survive. If it's so difficult to get money in the angel and seed and early VC.
I think that's an interesting point. I mean, you need to grow. You need to think global, probably from the beginning, more so than 10 years ago, where you would still have sort of more local markets, I would argue. And in terms of growth, ideally, yes. The VC world is also globalizing in a way. We would never invest in we would never have the chance to invest in Silicon Valley pre-COVID or 5 years ago, because to have to meet people. Now we got the chance to invest into a travel startup there. Yeah. I guess most of your products are global, right? I mean, it's in English, and usually the point is no longer to grow a German travel OTA. You rarely see this.
Yeah, this is a relative picture. Does it also mean that the absolute amounts diminish for the early stage, your angel seed?
No, because you had, especially you had this, it's gonna go down now, I guess, right? With all markets, it's just falling. But 2021, 2022 have effectively been really strong months on the VC scene. I don't know the numbers by heart, but I would argue that probably early VC is stable. Angel and seed is stable in terms of absolute numbers. Not discounting for inflation again, which is just a huge issue. Yeah.
So are you saying that valuations are going down as well? Because I see valuations are going up in lots of cases.
No, they're going up. I mean, because it's up here, right? I mean, here
Yeah.
is, yeah, exactly, going up. I
Okay.
mean, they have gone up. Let's see what happens now. I mean, they have been fairly stable up until now throughout this year, as far as I can tell. But it's all a matter of interest rates, right? In the very end, and bonds effectively devouring most of the financial markets. This market is still fairly small versus say the bond market, of course. So interest rate has a big impact there.
Great. Karen, you would like to continue challenging Jan?
No, I think I'd rather like to keep the positive atmosphere in the end right now.
Now let's flip to the prettiest slide. I don't know, not this one.
Then I would ask a final question. If you have a free wish on your list, or what would it be for the startups?
That's to Karen, right?
To both of you.
I have a free list, a free wish, no.
Free wish, yes. Both of you has got a free wish for the startups. What would it be?
Ladies first.
Oh,
to grow a great startup and sell it high to Google.
no, not really. No, I would really like to see some change in politics in Europe regarding the startup industry. I mean, as you mentioned, Europe is just small in comparison to other markets, and that has a lot to do with how politics are interested in the startup industry or not. And in Europe, they aren't, especially in Germany. And that would be a big wish on my side that,
yeah, that probably
we come to changes. I mean, with the new government in Germany, in the first place, I thought, okay, now change is going to come. Then the new government is now busy doing other things, handling the war. That's a big challenge for sure. But I still hope that the new people in the government will bring some change for us.
Yeah.
Yeah, it's and not just the government, right? I mean, the venture capital scene is it's a matter of education, I think, as well. I mean, we are undercapitalized in VC. I think 10x versus Israel, for example, which of course is a startup by itself, Tel Aviv. But even a country like Cyprus is more venture capital money per capita than Germany, and you wonder. So it's probably a matter of education there as well, of taking that risk effectively and contributing to the future, right? Because every one of these guys started in the VC world as a startup, every one of the big four, and but that has to come from politics and society and education, I guess.
Yeah.
Sorry, but shouldn't it come from governments? If you think about the UK, you get very good tax incentives to invest in startups.
UK is much better, yeah.
Yeah, so, and I see that, and that's why I'm incorporated there, because I know if I want to raise money, I can get investors, and I do invest in other startups, I can get 50% discount on my tax. And therefore, that's almost unique in Europe. And perhaps giving tax incentives would help to grow this business and make it more attractive for investors.
For sure. But I think I don't know the number for we're very bureaucratic even at that, right? So then I think out of the COVID subsidies, not even 1/3 was essentially pulled because it was too bureaucratic, and that's certainly an issue we have in Germany at least. Yeah.
Great. I think we are through. Answered all the questions. Or anybody else? Good. Then, thank you very much, Karen and Jan.
Yeah, thank you.
Great presentation for this to letting us participate at your highly interesting and deep knowledge. And yeah, I'd say we've learned a lot, hopefully, and yes, about the changes the .com bust entailed, and in which way it has and will furthermore change the way startups will sustainably grow, hopefully succeed, and then at the end exit.
Thank you.
Welcome.
Thank you. Are you going to submit a list of the attendees?
Yes, I can do, of course.
Mm-hmm. Yeah, that would be
yes,
really nice.
Of course. And I will share, or I'd like to share 2 invitations with you. The first will be that we will have our next ennea Open Masterclass in July, on July 5, with Professor Heiko Seif and Julian von der Neyen from AlphaBuild. And then they will talk about mobility in this session. They will talk about the necessary infrastructure for connected, seamless, intermodal mobility solutions. We'll look forward to it. And the next invitation is with regard to our another masterclass format, the fundraising masterclass. It's directed to as well to startups and their founders, of course, and it's going to start on June 17th with a kickoff event, hybrid kickoff event in person in Munich, and then online, followed by 6 online sessions, and a closing event again in Munich. You have the chance to apply via the ennea VC website, or directly via the masterclass fundraising website. Great. So thank you very much. It was a great pleasure to have you all here together. Wish you a nice evening, and then see you next time.
You too.
Thank you.
Bye.
Thank you. Bye-bye.
Bye.
Thank you. Bye-bye.